Did you see what happened with interest rates this past week? We're going to go over what just happened, why it even matters, what is recently happening with some investments. Is a recession coming? Is it already here? What this could mean for mortgage rates if you're looking to buy a house, could that affect you? And kind of everything in between. So diving right into what the heck happened this week this is what happened in one chart. This is just in 5 days, the 10-year treasury is falling off a cliff, or at least starting to. You could see it started in the low 4% and then dropped to under 3.8%. And this is bonds. If you don't know, bonds really don't move too much. So this amount of movement in just a couple days is insane. So if we want to compare this to what happened to other investments just to see what the heck happened this week, it's pretty wild. Real quick, just to look at the past 5 days of the stock market, the S&P 500, you could see it was doing all right, and then toward the end of the week was completely falling off. If you compare that to a year to date, so since January, it is still up over 12%, but you could see recently over the past couple of weeks, it is coming down relatively hard. Similarly with the NASDAQ, so tech stocks, you can see in 5 days they're down over 3%. Toward the end of the week, there was a drop. Again, year to date, still up over 11%, but recently is coming down hard. This is what happened with bonds. A popular ETF is TLT. So this is looking at 20-plus year treasury bonds. And you could see this week was up over 5% compared to markets. It was down, bonds were up, because when interest rates drop, bond value goes up. Comparing to year to date, you could see it was completely fallen off. The low was around May, but since then it is rebounding quick. Some other investments that people might not watch as closely would be gold. This week is up over 4%. You could see toward the end or that last day there was a bit of a drop. Seems like people were struggling with liquidity, so a lot of selling. That could be what's happening in the future, like with next week, we'll just have to see. But year to date, a lot of people might not realize this, gold is up over 20%. That's more than the stock market. Gold is usually like a fear trade, so a lot of things going on with like tensions overseas, wars, what could happen with the economy if we're going into recession. So if there's a bunch of those fears going on, that's why gold could be going up. And recently central banks were buying up a lot of gold. That's a separate topic. If you want to look at oil, if you noticed at the gas pumps, it was kind of all over the place. Year to date is just up like 3%, over 3%. But the peak was around July and started plummeting since then. I know around my area is like low $3 per gallon now. And just for fun with Bitcoin, what happened this week, completely fallen off, over 9% drop. So let's look more at actual interest rates, and we'll eventually go into what this actually means. Should you be concerned? Could a recession be coming, or is it here already? So this is looking at some interest rates going from 3 months down to 10 years, and you could see recently huge red changes. So the 10-year is around 3.8, and there's usually a comparison between the 2-year and the 10-year. The 2-year is 3.88, so they are getting close, but you could see shorter yields, so that 3-month, 6-month, 1 year is higher than the 3-year, 5-year, 7-year, 10-year. So that means the curve is inverted. For example, if you look at the 10, 3.8, and the 2, 3.88, that's negative. But you can see, if you look at the 7 and 10, the 7 is lower than the 10, the 5 is lower than the 7, but the 2 isn't lower than the 3. So it is slowly starting to uninvert. And this is the part where we start looking at why does this matter. So this is a chart from Fed, the Federal Reserve, looking at what we were just seeing, the 10-year versus the 2-year. And this is going back to the 80s, and you could see recently we had a massive inversion, very negative. And you could see that, by the way, each of those gray bars are recessions. And before each of those recessions was an inversion. In the 80s, in the 90s, the 2000s, 08, COVID slightly, and right now. But what happens when it uninverts, that's when a gray bar comes in, which signifies a recession. So as we're getting closer to uninversion, we are closer, if not already, in a recession. We're already starting to see that, by the way, with unemployment. People are losing their jobs. People are struggling to pay their bills, not only with auto loans, but with credit cards. Buy now, pay later loans are becoming much more popular because people don't have money. Let's look at unemployment, of at least what they're telling us. So again, this goes back to all the way to like the 50s. But recently, we're looking toward the end of the chart to the right, we're starting to see it starting to go up. And again, with those gray bars, just before those, it is starting to go up. So could this mean we're starting to go into recession? I would argue we're already in it, but people aren't realizing that we are. And when this actually starts to happen, people would be like, oh yeah, we've been in it. Obviously, there was a huge spike during COVID because everything shut down, and that was massive. But like, I hate to be political, so I don't like to get into that. But when they're like, oh, all-time low unemployment, that's almost concerning because it's usually at an all-time low right before things start happening. And again, what happens during this? So this is looking at the Fed funds rate. This is like an overnight rate with the Fed. So like what essentially banks can get if they're borrowing from the Fed. Even if you're getting like a 1-month T-bill or a 3-month T-bill, you're able to get over 5% right now. But you can see toward the end of that chart, we've been flat and things are starting to get hit or drop. The Fed is expected to drop rates in September. If things start happening and they need to cut sooner than that, that will probably be a problem. But again, even if you just go back to 2000, that peak, it kind of was flat, then cut. Oh wait, there was a plateau, then a cut. COVID, there was a plateau, started to slightly drop, then a cut. Right now, we're at a plateau and we're about to cut. And when during that cut, you see a gray bar, again, recession. Another quick chart with initial claims. When people lose their jobs, they start applying for unemployment. And you can see, obviously, it has come down since 2021. But it is interesting that it is starting to tick up since the beginning of this year. Now, it has been kind of at this levels since around mid-23. But if this continues to go past that, that means people are losing their jobs more and more and more. Now, in the beginning of the video, we did mention about mortgage rates. If you're looking to buy houses, let's just look at some mortgage rates. You could see since 08, it was kind of dropping around like 2013, kind of hit a little low right there, did go up, and then since 2019, complete fall off a cliff. COVID happened and dropped to a low of 2021. You could get mortgages under 3%, which is crazy. And then obviously since then, completely skyrocketed. Rates have been over 7%, but they are starting to come back down. So as they start cutting rates, like they did during COVID, will it be to that extent? I don't really think so. We'll have to see. I don't know. But you would see that rates could start coming back down to under 6%, under 5%, maybe even the 4%. So we're going to look at inflation in just a second. So we already pointed out, like, we could be at least acknowledging that we could be in recession. Rates could be dropping. What could that mean for the market? I mean, we've seen what has recently been happening this past week. We'll have to see what happens. Doesn't look pretty. Could help with mortgage rates. What would that mean for house prices? Honestly, I have no idea. In my area, I know there's a high supply. I live in a townhome community, and there's a handful of people selling. They're also trying to rent. So that's kind of a buyer's market. Like, why should I pay you that much when I could get it that much cheaper right down the road, you know? So the supply is high. It might start bringing more buyers when rates come down. People are like, hey, it's a little bit cheaper. Let me start getting in. So it might start eating up the supply. We'll have to see. Same thing with rents. They're starting to maybe rent more. At least in my area, I live in Raleigh, North Carolina. So many new communities going up. And the problem with that, a lot more supply. Now, if you're a buyer or a renter, you could be picky. That's actually good for you. So looking at inflation, and I want to point out a big thing here. So obviously, since going back to the 50s until the 70s and 80s, huge inflation, especially the decade of the 70s. You could see there was a peak around 74, 75, came down, then went back up in 1980, and then completely came back down since then. What happened during COVID? Spiked first round, came back down, and if we go into another recession, if that triggers more government spending, if there's more stimulus, there could be another wave of inflation, similar to the later part of the 70s. So I don't think inflation is over. You could see it is coming back down. But when people say, oh, inflation's coming down, it doesn't mean prices are going down. It means prices are going up slower. So the price increases that we've already seen, we now have to live with that. If not, watch it get worse. So watch out if something does happen, you start seeing massive, like trillion-dollar spending and stuff like that. Unfortunately, brace for inflation. And historically speaking, it seems like that's going to happen. Recently, I've been just loading up on T-bills of just saving as much money as I possibly can because you're able to get that 5% interest rate. When rates start going down, you can't get those rates anymore. So if you're looking to lock in those higher rates, that time is leaving us, possibly quickly. So knowing this knowledge, you could kind of shift of what you want to do with saving money, what you want to do with investing money, what you want to do possibly with the housing market, if you're looking to buy, if you're looking to sell. Me personally, I think it's going to be an interesting election because I hate all politicians. That's just me personally. Because this happened during COVID. Things started hitting the fan before COVID. The repo market was exploding. You know, things were getting shaky. And then they're like, hey, COVID's a thing. That's the problem. When something else was breaking before that. That could happen during the election. I have no idea. But things are starting to happen now. If something happens with the election, they might blame the election when things started breaking before that. I'm not sure. That's what I'm keeping on my radar. That's why I'm trying to save as much as I can right now. Because if opportunities come around, you want to take them. Now, how quick could interest rates go down? I think that's a pretty good question. If you looked during 2008, it kind of took maybe a year or so for rates to like drop, and eventually got very low. During COVID, it started with slight decreases, and then literally like over a weekend and within like a month, they just slashed it to zero. So we might start slowly cutting and then all of a sudden just a slash in rates like probably over a weekend. So that's what's happening. That's why it matters. And hopefully you guys could kind of prepare for it. Things are changing very quickly. This past week was an eye-opener for everyone. I think people were questioning if they were starting to cut rates. Now they're like, oh, this could actually happen. We could be in recession. People could lose even more jobs. People could struggle even more. And if we go into recession, if the government's going to cause more inflation, then people are going to struggle even more. So that's why this is very important. So hopefully none of this happens. I'm preparing for the worst, hoping for the best. But historically speaking, we've seen this movie before. There's a plateau in rates. They start cutting rates. Recession happens. It seems like that's what's going to happen. So hopefully you guys prepare. Definitely good luck out there. If you have any questions, comments, concerns, leave them down below in the comment section. And I'll see you guys in the next one.